You have left India to build a better life abroad. You earn in dollars, dirhams, or pounds, but deep down you still want to grow your wealth in your own country. You have heard India is booming, the stock market is flying, and mutual funds are growing fast. But the moment you try to figure out how to invest as an NRI, things get confusing. NRE, NRO, PIS, TDS, too many terms, too many rules. Nobody explains it simply. That's exactly why I made this video a complete, easy to understand guide for NRIs who want to invest in India the right way. I will walk you through bank accounts, platforms, taxation, and the best 2025 strategies step by step. So before we begin, do hit that like button and watch till the end, because I will also share a free NRI investing checklist to get you started today. Let's bring your money back home the smart way. Here's a disclaimer: the views shared in this video are entirely my personal opinions. This content is meant for educational purpose only and should not be treated as a financial advice. Please do your own research or consult a registered financial advisor before making any investment decisions. Who is an NRI and why investing in India is smart? An NRI, non-resident Indian, is someone who lives outside India for more than 182 days in a financial year. Even if you earn in dollars, pounds, or dirhams, as long as you hold an Indian citizenship or recently left India, you are considered as an NRI. And now the main question: why India is a smart choice for NRIs? Firstly, India has the youngest workforce in the world. With a median age of just 28 years, India's population is bringing fresh energy, innovation, and strong economic growth. Also, India is one of the fastest growing economy and stock market. India's Nifty 50 index has given around 14% CAGR over 25 years and around 11 to 13% CAGR in the last 10 to 20 years. In the last decade alone, Nifty returned over 180%. Indian markets deliver higher returns than many global markets. Over the past 5 years, India's Nifty 50 rose 32%, approximately 5.7% CAGR. British investors acclaim that Nifty and Sensex outperformed the S&P 500 in that period. Nextly, home currency benefit. As rupee-based investments, your returns are in Indian rupees. If the rupee strengthens, your overseas returns grow further when you convert back. And finally, emotional satisfaction. Investing in India means supporting its growth. Your money fuels companies, infrastructure, and job creation back home. It's not just profit, it's pride. Now that you know what an NRI is and why India offers a powerful combination of growth, returns, and emotional fulfillment, share this video with your NRI friends or family. Even future NRIs, your cousins, siblings, classmates who may leave India tomorrow, should know that they should not stop themselves from investing smartly. Let's help every proud Indian across the globe grow wealth in their homeland simply and confidently. Step 1. Open the right bank account. Alright, now that you have understood why investing in India is a smart move, let me break down the entire process into 3 simple steps. Yes, just 3 steps. That's all it takes to start investing in India as an NRI. And step 1 is the most important foundation: opening the right bank account. If you are an NRI, you cannot use your old Indian savings account to invest. It becomes legally invalid for transactions once your residential status changes. You must open a specialized NRI account, and you have mainly 2 options: NRE or NRO. An NRE account, or non-resident external account, is meant to park your foreign income money that you earn outside India. You can freely send this money back abroad anytime, and the interest earned here is tax-free in India. But remember, you cannot deposit Indian income like rent or dividends into an NRE account. On the other hand, an NRO account, or non-resident ordinary account, allows you to deposit both foreign income and Indian income. It's more flexible because it also lets you hold a joint account with a resident Indian, like your parent or spouse. The only downside is that interest earned is taxable in India, and repatriation, which means sending money back abroad, is limited to $1 million per financial year. Some banks also offer FCNR accounts, which are fixed deposit accounts where you you can hold money in foreign currency like USD, Euro or GBP. These are great if you want to avoid currency conversion losses. The interest earned is usually tax-free and the money is fully repatriable. So if you want more flexibility with fewer restrictions, especially if you have income sources in India, an NRO account is usually the smarter choice to start your investment journey. If you want a dedicated video on opening an NRO account, just comment below. I will make a simple video for you. Step 2. Choose where you want to invest. Now that you have set up your bank account, let's move to step 2. Picking the right investment avenues based on your goals, risk appetite and investment horizon. Here are top options to consider. Stock market, direct equity and derivatives. If you are an NRI and want to invest in Indian stock market, the first thing you need is a Demat plus trading account. And here's something most people don't know. There are two types of accounts you can open. A PIS account, Portfolio Investment Scheme account, which requires approval from RBI and is typically linked to your NRE account, or a non-PIS account, which is usually linked to your NRO account and doesn't require RBI permission. Now, which one should you choose? If your goal is simple long-term investing in equity stocks, a PIS account through NRE gives you full repatriability and tax-free interest on capital gains. But this route comes with slightly higher charges and you can only invest in stocks, no derivatives. However, if you are looking for more flexibility or if you are interested in trading, equity, futures and options, then a non-PIS account via your NRO bank account is a better choice. NRIs can trade derivatives through NRO accounts only as per SEBI regulations and it does not require RBI permission. So to summarize, want simple delivery based stock investing? Go with a PIS plus NRE account. Want broader access including FNO trading and lower paperwork? Go for a non-PIS account with NRO. Platforms like Zerodha, ICICI Direct and Upstocks offer both options for NRIs. Just make sure to declare your residential status and submit the proper documents during onboarding. Next, mutual funds. Now that we have spoken about the stock market, let's talk about the mutual funds. One of the easiest ways to invest if you are an NRI. The best part, you don't need any special RBI permission or a PIS account to invest in mutual funds. All you need is a bank account, NRE or NRO, and something called a FATCA declaration. FATCA simply means you confirm to the Indian government that you are living abroad. It's just a small form you fill online. It's needed to follow global tax rules and avoid confusion. You can invest in mutual funds through apps like Grow, Zerodha, Coin, Kuvera, or even directly through the mutual funds company website. If you go for a direct plan, you don't pay any middleman fees. So more of your money stays invested and grows. If you use your NRE account, the money you invest and earn can be sent back abroad easily. And in some cases, you may not have to pay tax in India. If you use an NRO account, the money stays in India and may be taxed. So if you are looking for something simple, low effort and long term, mutual funds are great option to begin with. Next, real estate and fractional ownership. As an NRI, you can invest in Indian real estate in two main ways: traditional full ownership or newer models like fractional ownership and REITs. NRIs can buy property directly. Though it's paperwork heavy, it offers full control and income. But fractional ownership is growing fast. It's now a $500 to $600 million market where you buy a part of high value commercial property, enjoy proportional rental income and price appreciation, and exit after 5 to 7 years, all managed via an SPV, special purpose vehicle, which is just a legal structure used to pool funds from many investors and manage the property professionally through your NRO account. It gives access to grade A real estate with 25 lakh upwards and rental yields of 8 to 10%, IRR around 16 to 20. Alternately, you can invest in REITs, real estate investment trust, listed like stocks, which allow easy buying and selling and steady dividends. Next comes fixed deposits, bonds and gift city funds. If you are looking for a safer and income generating options, here's how you can invest. NRE, NRO, fixed deposits, FDs. Park your money in India, earn interest 6 to 8%, and for an NRE FD, you can easily send your money back abroad. FCNR accounts offer FDs in foreign currency, USD, Euro, etc., protecting you from currency risk with tax-free interest. Also, there is something called Gift City IFSC products. These are located in Gujarat. Gift City acts like an offshore hub within India. NRIs can open global currency savings savings account, offshore FDs, and invest in AIFs, PMS, bonds, ULIPs, and REITs with better tax treatment and foreign currencies. Bonds on these IFSC platforms now have a lower entry barrier, as little as 10,000 rupees. Fixed income here is a tax friendly, fully movable abroad, and has the flexible durations, a great hedge in uncertain times. Next, peer-to-peer P2P lending and other modern avenues. Welcome to the new age of investing. If you are comfortable with a bit more risk, these options might interest you. P2P lending platforms like India P2P, Rupee Circle, Lendbox help you lend directly to borrowers and earn 9 to 18% plus interest. RBI regulates these platforms, but credit risk exists. Real estate debt funds allowed to lend to developers and earn 12 to 18% returns, like being a mini bank. Co-living, student housing, crowdfunding let you to access niche sectors with 5 to 25 lakhs capital and yields of 8 to 20%. PMS, IPOs, pre-IPOs, ULIPs, startup bonds, and more specialized, often needed greater than 1 crore investment. These modern avenues are optional but interesting for those who want to diversify beyond equity, real estate, and FDs. Step 3. Tax rules every NRI must know. Now that you have understood where you can invest, let's talk about something very important: tax rules. If you are an NRI investing in India, you must understand how taxes work here. Many people get confused or avoid investing just because of tax doubts. But don't worry, I will make this very simple. First, you need to know that as an NRI, you have to file your income tax returns ITR in India if your total income in India is more than 2.5 lakh in a year. Even if your income is below that limit, filing ITR is useful. You can claim refunds if TDS was deducted, or carry forward losses, or simply keep your records clean for visa or loan purposes. Now let's come to taxes on money you earn. If you earn interest from an NRO bank account, banks will deduct 30% tax directly before giving you the money. This is called TDS, tax deducted at source. The same applies to rent from property, dividends from stock, and other income earned in India. For stocks and mutual fund investments, capital gain tax applies. If you sell a stock or equity mutual fund after 1 year, it is called long-term capital gain and tax is 10%. If you sell before 1 year, it's short-term capital gain, taxed at 15%. For debt mutual funds, property, and gold, long-term gains are taxed at 20%. But you get indexation benefit, which means tax reduces after adjusting for inflation. You will not get indexation benefit after 23rd July 2024, but you will also be taxed at 12.5% only instead of 20. If you invest in real estate and sell the property after 2 years, it is called long-term gain. Usually the buyer will deduct 20% as TDS, but as per 2024 to 2025 budget changes, the final tax rate is now 12.5% and you can claim refund later by filing your ITR. Now many countries like UAE, Singapore, or Oman have DTAA, double taxation avoidance agreement with India. This means if you have already paid tax in your country, you may get some relief or full exemption in India. For this, you need a TRC, tax residency certificate from your country, and submit form 67 while filing ITR. Also, as per latest budget 2025 rules, money gifted from parents or relatives up to 10 lakh per year is not taxed, and sending money abroad from NRO account now requires form 15CA and 15CB. As usual, you can send up to $1 million per year. Lastly, if you are an RNOR, resident but not ordinary resident, which happens in certain situations like returning to India after staying abroad for many years, you may now have to pay tax in India on foreign passive income like rent, dividends, or capital gains. This is a new change in 2025. So to keep it simple, file your returns, keep your documents ready, and use the DTAA benefits smartly. Before proceeding, just do one thing for me. Share this with that friend who wants to know about taxation of NRIs. Next, strategies NRIs should follow while investing in India. Now that you know where and how you can invest in India, the next important question is, what's the right strategy? See, there is no one size fits all answer here. It depends on your risk appetite, your investment knowledge, and your financial goals. If you are someone who likes to play safe, it's better to stick with fixed deposits, government bonds, and bit of real estate. These options are stable and give you regular returns without much tension. But if you are open to moderate risk, they are professionally managed and have given decent returns over the years. And if you know bit about fundamental or technical analysis, then you can go one step ahead and invest in stocks directly. You can also consider investing in IPOs, which carry some risk but may offer higher rewards too. Now, for those who are comfortable with higher risk, there are options like peer-to-peer lending, fractional real estate lending, and even derivative trading, which you can do through an NRO non-PIS account. These have the potential for higher returns, but they come with more uncertainty, so be cautious. Whatever strategy you choose, it's always smart to have a CA, chartered accountant, and a SEBI registered investment advisor by your side. As an NRA, you are likely investing big amounts, so having professionals to guide your taxation, compliance, and portfolio can save you from a lot of future issues. Here's a simple rule of thumb. If you have 100 rupees to invest, put 50% in safe options like FDs, bonds, and real estate. Put 30 to 40% in moderate risk options like mutual funds, stocks, and IPOs. Put 10 to 20% in high risk areas like P2P lending, derivative trading, or real estate lending. And of course, review your portfolio once in a year. Investing is not about chasing returns, it's about staying smart and balanced. Don't miss the Indian growth story. India is not just your homeland, it's one of the world's fastest growing investment opportunities. While you are building your life in Dubai, London, or Toronto, or Singapore, don't forget the heart still beats for home, and your money should too. With the youngest workforce, booming startups, strong GDP growth, and a vibrant stock market, India is on a journey that very few countries are experiencing right now. And this is not just about emotions, it's about smart numbers, real growth, and long-term wealth creation. So don't miss the bus. Set up your NRA bank account, choose your ideal investment, whether it's stocks, mutual funds, bonds, or real estate. Pick a trusted platform and let your money grow where your roots lie. You have watched till the end, that shows that you are serious. You have already liked, shared, and commented. We thank you for that. If you believe in India's growth, drop India flag emoji in the comments. Let's flood the comment section with flags. Let's show the world where we belong and where we invest. Jai Hind. This is Bala signing off.